Hey everyone, welcome back to Corporate Decoder, the place where we dissect the financial statements of companies to see if their future is as bright as their press releases claim. Today we are diving into Capricor Therapeutics quarterly report for June 30th, 2025. Get ready because this one has some interesting twists and turns, especially an update that might shake things up. Capricor Therapeutics Inc. is a clinical stage biotech company focused on developing new treatments for diseases like Duchenne muscular dystrophy or DMD, a serious condition that affects muscles. Now, like most companies, Capricor is putting a lot of its hopes on future success, talking about drug candidates, clinical trials, and regulatory approvals. But as we know, the road from trial to marketplace is a long one and often bumpy. Let's jump straight into the numbers. As of June 30th, 2025, Capricor had about $124 million in current assets. That's cash and things they can easily turn into cash, like marketable securities, which were about $100 million, but they also had accumulated deficit of about $250 million. That means they spent way more than they earned over the years. Their current liabilities, or what they owe in the short term, were around $28 million, and the total stockholders' equity was about $105 million. So while they have assets, they also have a lot of past losses they are carrying. Now let's look at how they did money-wise. For the 3 months ending June 30th, 2025, they had no revenue, that's zero. But their research and development costs were a hefty $22 million. General and administrative expenses, which cover things like salaries and office costs, were almost $6 million. This led to an operating loss of about $27 million for just that 3-month period. Looking at the first 6 months of 2025, the numbers are even bigger. Research and development expenses soared to about $41 million and general administrative costs were over $11 million. This resulted in a total operating loss of over $2 million for just half a year. This translates to a loss per share of around 57 cents for the quarter and $1.10 for the first 6 months of 2025. In terms of how they fund themselves, they had some financing activities. They issued some common stock in a public offering in October 2024, bringing in about $86 million, though they paid out about $5.4 million in fees. They also had a private placement in September 2024 with Nippon Shinyaku, a partner company which brought in about $15 million. When we look at how cash is moving for the first 6 months of 2025, they used about $26.5 million for operations. They generated some cash from investing activities, mainly from selling and buying marketable securities, bringing in about $38 million. This contrasts with the same period in 2024, where they used more cash for operations, about $13.5 million, and got less cash from investing activities. So despite using a lot of cash for operations, their total cash actually increased from about $11 million at the end of 2024 to over $23 million by June 2025. This is mainly because they were selling off some of their investments more than buying them. The company estimates its current cash and investments will last them into the fourth quarter of 2026. That's a bit of breathing room, but in the fast-paced world of biotech, that's not a very long runway. Now for the big story in this filing, Capricor's main focus is a drug called THERAPEUTICS for DMD. They submitted their application to the FDA for approval, and it was initially given priority review with a target action date of August 31st, 2025. This sounded promising. However, just as they were getting close, in July 2025, they received a complete response letter, or CRL, from the FDA. This means the FDA isn't ready to approve the drug yet because they need more proof that it really works. They also mentioned some issues with how the drug is made and controlled. Capricor is already working on a response and is talking to the FDA again. They plan to include data from another trial, HOPE-3, which should be ready later in 2025. This is crucial because if the FDA accepts their new plans, it could still lead to approval. The HOPE-3 trial itself aims to confirm deramiocel's effectiveness. They changed the main goal of the trial to focus more on heart function, which seems to be what the FDA wants to see. The results are expected in late 2025. Beyond deramiocel, Capricor is also developing exosome-based therapies. These are tiny sacs released by cells that can carry important molecules. They have potential in fighting infectious diseases and other conditions. They are even working with the National Institutes of Health on a vaccine for COVID-19 for COVID-19. For COVID-19, called COVID-19, called COVID-19, called COVID-19, called COVID-19, called COVID-19, called COVID-19. As you can imagine, all this research and development costs a fortune. For the 3 months ending June 2025, R&D expenses were about $22 million, a big jump from about $12.5 million in the same period last year. A lot of this increase is due to more staff, higher costs for the deramiocel trials, and preparing for manufacturing. For the 6 months of 2025, R&D spending hit over $40 million, up from about $23.6 million in 2024. This is largely driven by the same factors: more people working on the deramiocel program and the exosome platform. General and administrative costs also went up significantly. For the 3 months of 2025, they were nearly $5.7 million, a big jump from about $3 million in 2024. This increase is mainly due to more staff and higher stock-based compensation, which is a way companies reward their employees with stock. The story is similar looking at the 6-month period, with G&A expenses rising from $71 million in 2024 to over $11.7 million in 2025. Again, more staff and stock compensation are the main drivers. On a brighter note, they did see their investment income grow. For the first half of 2025, they earned about $2.5 million in investment income, up from about $1.1 million in the same period of 2024. This is because they have more money sitting in investments like money market funds. Now, for some legal news, there are 2 lawsuits mentioned. A securities class action was filed in July 2025 against the company and its CEO. And a derivative action was filed in August 2025 against the directors. These kinds of lawsuits can be very costly and distract management. Looking at the bigger picture, Capricor relies heavily on external funding. They've raised money through stock sales and have key partnerships. Like with Nippon Shinyaku for the US and Japan markets, their future hinges on getting deramiocel approved and successfully commercializing it. The recent CRL from the FDA for deramiocel is a significant setback. While they believe they can address the FDA's concerns and potentially resubmit their application with new data, this adds considerable uncertainty and delay. Biotechnology is a high-risk, high-reward game, and Capricor is certainly playing in the high-risk segment right now. Their cash reserves provide some buffer, but the increased spending on R&D and G&A, coupled with the regulatory hurdle, means they will likely need more funding sooner rather than later. The success of their exosome platform and the StealthX vaccine could offer future diversification, but those are still in very early stages. For now, the market's reaction to the CRL and Capricor's ability to navigate the FDA's feedback will be critical for ZA. Alright, that's our breakdown of Capricor's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.